Welcome to Markets Now. I'm Michelle Rook with Kooima Kooima Varilek. Mixed trade in both the grain and livestock futures this morning. We have soybeans to the plus side. We're mixed in wheat, a little bit lower in the corn market, as well as hogs. And then cattle futures are to the plus side again this morning, Brad. And we had new highs for the move on Friday. We had stellar cash trade last week. Are we going to be able to continue to build on this, do you think?
Kind of feels like a good market, doesn't it?
Yeah.
Thanks. Yeah. Thanks for having me on, Michelle. Always enjoy this. Cattle thing I thought was largely influenced by finally the cash showing so much proof that we were able to, at least for a minute, forget about talking about bird flu or whatever other outside event that you can possibly conjure up to keep the market from going where we think it might be going here. Very strong cash market, and I think largely influenced by the fact that the cattle here in the north, the supply here is extremely tight. You and I have talked about this for several weeks. Seeing that there's maybe some disparity between what cattle on feed reports from last fall were suggesting we had and the reality of what we actually do have. We are current. Our show lists are very small here through northeast Nebraska and all the way up into Iowa. I say that anecdotally, but it's just that's what I do. I do kind of try to keep track of this stuff. So, I influenced by the supply in the north and by the quality of the cattle in the north also. So nice to see. We got 187. In fact, 187 was paid on new crop calves. They were mine on Thursday, so it's legitimate. Good sign. I think the cash market acts really good. When you got a discounted structure market like this, it's a little easier to pull it along.
Absolutely. So you think we'll be higher again this week?
We're going to ask 190. I think so. I think the Packers a little closer to the knife than he would like to admit. Hearing a few quiet whispers of cattle that were bought for the second week of May, but actually we got a little room on Thursday if you want to move them early. So I think the Packers a little closer to the knife than he'd like to admit, and we're starting to approach that. What I expect to be another good round of demand here as we get closer to Mother's Day.
Yeah, and of course, we have had Packers do everything from try to slow kills to other methods to try to prop up this, their margins. But right now, are they pretty tight?
Well, you know me, I'm a real advocate for the Packer. Oh, sorry. But I gotta think, some of those boardroom meetings here have to be a little tricky. So let's see, they've all done their cooler clean out, which they have to by law, twice a year. But they always time that, at a time where it seems like, well, let's try to get a little leverage back. Many have gone through their schedule of 32 hours, in other words, not going on Fridays. But a lot of those places also have guaranteed contracts that they have to guarantee so many hours to the workers. So I got to think they're looking at a real conundrum. Do we keep killing and try to stretch this supply even thinner across the whole spectrum of who has to own cattle, especially going into this time of year? Or do we try to, slow it down some more? Now, the one thing, the fly in the ointment, if you want to call it that, the gorilla in the closet, is the average weights. They bug me too. And I think a lot of that weight thing is because the weather was so good in February and March, but still, we should see these weights start to tumble now as we transition from yearlings to calves. I guess I hope they do. If that persists, I'll have to maybe, take off my bull hat here a little bit, but I expect that the weights will come down and think about it really realistically. When you have tight supply, you still have to fed supply. You still have to create a supply, but maybe we got to make them bigger for a while. So maybe we're going to have to amend our thinking a little different paradigm that these cattle are going to be bigger because there's less of them. And we're still got to get this beef production here somehow.
You bet. So you mentioned the bird flu news. Of course, we got more guidance from USDA on Friday in terms of lactating cows that are going to go into either sale barns or the slaughter. And is that going to alleviate some of the fears that we had in this market?
Well, information is important. Clarity is important. I guess I was kind of relieved to see some of the details here. I got a friend of mine that's a cow killer, not anywhere around here, a long ways away, and he's been a resource here for this whole thing. He's in a dairy state. And he said to me, surely they don't mean that lactating cows, if they're for slaughter, that would be able to cross state lines. And I said, yeah, but it doesn't read that way. That not that first deal. So when the clarification came out here across the weekend, where indeed you can move across state lines cows for slaughter, I think that helped a little bit. The reason I bring it up is because the fear is that, think about it, a dairy cow, they're very regionally, the supply is regional, right? I mean, to the point where, for instance, there wouldn't be enough cow kill plants in Minnesota to kill all the dairy cows in Minnesota. Right. That's why they go to Omaha. That's why they go to Green Bay. That's why they go to Pennsylvania. Yeah. So, the worry was, well, what does that mean to the whole fed cow market then? But anyway, at least we got some clarification, and knowledge is power. I'd love to go through a week here. We wouldn't have to talk about bird flu. I thought we were getting close to that. I guess I think we are. But we'll see. Market's a little overbought here. It's month end tomorrow. If we're down a little bit for a second here, don't get too panicky. But I wondered if you don't see a little evening up ahead of month end tomorrow.
I was going to ask you about that, just based on the fact, like you say, month end and what the fund's position is right now. But you just answered that. So let's move on to hogs. Seeing a little pressure here. Futures premium to the weakening cash index. Do you think that's part of the problem here or not?
Never a dull moment with the hog market, right? For all you youngsters out there that didn't know about pork bellies, this is the way they worked. Extreme volatility, $5 straight up, $5 straight down. Now we're toward the bottom side of what's been the last 3 week or so trading range. Yeah, we probably got a little bit ahead of ourselves. And I think there's some issue too, like you usually bring it up. And I think you're right. I know you're right, because I know there's a couple of funds that actually are crazy enough, in my opinion, to trade cattle hog spreads. So when you get a volatile move in one direction, like you did on the cattle, often it's paralleled with an opposite move in the hogs, and vice versa. So I do think you saw some big unwind of that hog cattle spread. Now that we're down in here, though, our view is that supply changes just a little make a big difference, that there's a few less hogs as we move into summer. May is usually a pretty decent time, to be a little bit friendly. So we're just about there. My inclination is to think that the hog futures here could catch and try to, realign themselves a little closer to what we see to be a firming cash market.
All right, Brad, grains are mixed this morning. We've got soybeans seeing a little bounce. The corn market looks like maybe we've run up into some chart resistance, at least for the time being, and funds have maybe covered enough of their short position for a while.
Well said. I was hoping we were going to get a little more seasonal bounce here than we got. You and I talked about starting back there in early March that, well, we should get a bounce. We always get a planting rally bounce. I was hoping for a little more than this, but you're right. We're kind of stalling out just ahead of that 460 level on the July corn. I was hoping December corn up toward 480, which I would start if I was a hedger. I'd be aggressive at $5, frankly. We're struggling with. I'm glad the beans are a little higher, albeit a little. I don't really have a great reason why they are, other than the market continues to coil here in what has been generally a sideways affair. Battling with South America and world supply issues there, of course. Struggling with the lower wheat market today. Doesn't take much to break the corn. On the plus side, old crop corn should be supported by a strengthening basis. It sure is around here anyway. Gets a little firmer all along, and it's kind of driven by the ethanol grind. Margins for the ethanol guys are outstanding, and I would expect they'll be aggressive. That should support, at least for now, the corn market. I got a little more confidence the corn holds together, frankly, than I do for the beans, unfortunately.
All right, thanks for joining us, Brad Kooima with Kooima Kooima Varilek. That is Markets Now.